Eric Muathe, Muathe.com with World Market Analysis for the weekend of August 20th and August 21st, 2016. Let's take a look at how Asian markets closed, and pretty much a mixed bag. Let's call it slightly unchanged or slightly changed, hugging the zero line as of Friday's trade. Take a look at European market at the close of Friday, and we can see, let's call it slightly down day. The French market was down about 0.82, which is pretty much the biggest mover on Friday. Still not a big move lower. Take a look at the Americas with about hour and a half before the close of Friday's session, and we can see that the main markets are pretty much unchanged. And US market with about an hour and a half to go before the close of Friday, slightly down. Let's take a look at those charts. Let's begin by taking a look at the Australian market, and here we can see that for the weekly chart, it still needs to break out above the recent 2016 weekly closing high, and is 5644 is the number. Anything that keeps it below that number asks a question as to whether it can move higher. The reason being that on the weekly RSI, we are coming back to test this previous break. The break here off the highs of 15 are being tested on a weekly chart, and as you can see, for now it's becoming a trouble spot. So the only way the bulls can reclaim momentum to the upside is by simply moving the price above the recent weekly closing high at 5644. Now, unlike most of the world markets, the Australian market is probably one of the main markets that I follow that is down for the month as of right now, which is a negative. Now, the one thing we're going to see across this analysis for this weekend is, as long as the markets you are trading are positive for the month, we have to assume that the bulls are still in control. Here we have a different situation in that we are seeing the Australian market is down for the month, albeit slightly, about 0.6%. But this could be a problem, because the more this is confirmed as resistance on a month-to-month basis, the more it changes the equation month to month to a market that wants to go lower. So as long as we're also seeing this previous support line, and I call it support line because it held the market during the period when the market was moving higher, and we can say since the support here, which is this period, it's been bouncing on this line for successful moves higher. Ever since we broke through that level, which was here in 2015, we've come all the way back to back test that red line. So here's one market on a monthly chart that is showing signs of coming off the lows of 2016. Nice couple of months to the upside, but now potentially coming to resistance. Of course, what you'd like to see here is for the bulls to move above those two lines. Otherwise, failure to do so suggests that the next major direction, at least as far as the Australian market, is to the downside, if and more so as long as the monthly chart continues being red for the month. Let's take a look at the Chinese market. We see that this week, finally, we are clearing a short-term resistance area. And there is good argument that on the weekly, it is starting to change its behavior and makeup, because on the weekly since about July of 2015, we've been coming back to the 50 level on the weekly RSI and showing uniform activity resistance for some short-term highs. Uniform activity resistance here for these short-term highs. And again, we can also see this is rejection around the 50 level for the highs there. Rejection here with uniform activity for these highs. And recently we had actually stalled around that 50 level here. So what we are seeing here is a little bit of a change, because now we are moving back above that 50 level, which is a little bit of a change for now. And also, as we noted last week, the market needed to move above the recent weekly closing high here to at least attract some buying and for some momentum to the upside. So we saw the market do exactly that, and the level we are watching there is movement above 3,054.30, which happens to be this recent weekly closing high. So we can say this, as long as the market is above that threshold on a price level, then this market is changing, and now the equation is flipping to a market that wants to recover and over time move higher. Now if you take a look at a 3-year weekly chart, you see that potentially what could happen here, which would be bullish, is bulls would like to see that the moving averages cross over. In other words, you like to see the 13-week moving average and the 34-week moving average show a positive crossover. The last time we had such type of a bullish crossover was here, and of course we went on a major run. We don't have to see another major run, but at least a crossover between the 13-week and the 34-week moving average does change the dynamics slightly. And the last time we had a bearish crossover, of course, as you can see, was during this period, and market's been down since then. So a crossover between the 13-week moving average and the 34-week moving average would be bullish for Chinese market bulls. If we take a look at the Japanese market, we see that the Nikkei is coming back to a level where it is showing some type of resistance on the weekly. So the weekly not very bullish. If you take the line connecting RSI highs, you see that we are coming back and we are showing potential for resistance here. We hit that level this past week and we are pulling back. That's not very encouraging for bulls. And also there's another way of looking at this, which is to take a look at the most recent RSI highs on the weekly, and again you see that it corresponds nicely with the resistance being confirmed. So week to week, this market here does need to move above the 2 lines of resistance on the RSI, otherwise it might be pressured at the very best to be sideways. Now, something else we can also see on this weekly chart is bulls can be concerned that since late 2015, this market has been coming back to the 50 RSI level on the weekly and stalling. It did this here in late December for the highs there. Did the same thing in April of this year for the highs there, and now we are moving above 50 and back below it with uniform activity, which could be a problem. So the weekly chart here is showing signs of stall, and now the question becomes which is controlling, because if you take a look at the monthly chart is encouraging because it came back to test the recent perfect entry, or at least February entry. Ever since the RSI jumped above this level here, you see the market recorded a monthly closing low there. We haven't been at those monthly closing lows since. If you draw a line from here using our uniformity principle, you can see that support was held here for the lows of mid 2012. We've come here twice now in the last couple of months and we've held. So because of that double bottom support on the monthly still continues to show that this market could eventually bounce. So a little bit of a confusion as to what the market is trying to do short term. Weekly charts a little bit on the bearish, but monthly charts continue to be favorable, suggesting that until the monthly chart breaks this line, we have to assume that net, even with a little bit of a pullback, this market continues to be stable for now. Let's take a look at the Nifty, and what we see here for the Indian market is after 2 weeks of rest, now we have a chance of breaking out. So what the market needs to do here is move above the recent weekly closing high, and the level to watch here and to see whether the market can break out is 8683.15. So any breakout after 2 weeks of rest would be a fresh breakout, and this market has a chance of doing that. It won't take much, it's very close to breaking out. And also we need to watch this level here, because for momentum to continue moving the market higher, it needs to recapture the level above 69.1 on the weekly. Right now trading and closing the week at 68.47. So very close, just a little bit of a push above this price range, and moving the RSI above 69.1 is exactly what the bulls want to see. And of course, those who are bearish would like the market to fail to break out. So fail to break out, and for the RSI to fail to move above 69.1 and eventually roll over. So those two scenarios are definitely going to have to play out. So either the bulls are going to push the market higher, or the bears are gonna stall the market at current levels. If we take a look at the monthly chart, we can clearly see that the next task on a monthly basis is for the market to try and take out 2016's monthly closing high. So the level to watch on a monthly chart is for any potential breakout attempt above 8844.60, which happens to be this close here, month of February 2015. So a breakout above that price range would be very bullish. At the same rate, if the market turns down for the month, in other words, if the market turns red and is lower for the month, red here, and if the RSI does turn down here, that could be not a good situation. The reason being that if you take a look at a long-term monthly chart, any stalling at current levels would be extremely bearish because it would come back to this recent break. So you can see that once we broke down below that level on the RSI, the market has come off the highs of early 2015. So that would be confirming this break. And you can see this if you draw a straight line. So this here, resistance on this level here would not be good. And as we discussed over the last couple of weeks, if you go backwards, in fact, on this level, you can see some of the major sell signal levels in the market going back about, even on this chart, going back 2003, have began when the market drops below the red line. We see a major bear market develop. Here you have double top resistance above the line and back below it. So once we failed, that gave us the highs of late 2010 before this drop, and so on and on. So here the problem is, if this market turns red for the month and confirms resistance on the monthly chart, that could create a little bit of a problem, in fact a big problem. Otherwise, market bulls do need the market to move above that level, and also for the monthly RSI or the monthly price to break out above 8844.60. In fact, if you take a look at the Nifty daily, you'll see that the RSI is showing that the market continues to be very stable at the present showing, with the RSI showing support on this line, which has been giving it nice support over the last couple of weeks. As you can see, this line corresponds nicely with the recent lows in price, and now we are also hitting that level and bouncing. So as long as the daily continues to show that this is support line, the market should be stable at the very worst. Otherwise, a future break of this line is when we can really start looking for reasons to be bearish. Right now, the daily chart continues to act very well. In fact, another way of looking at this is just take a look at where the market has been bouncing recently, and you can see that it's been finding support at the RSI 50 for nice re-entry. So all these have been successful bounce with uniform activity below 50 back above it, and each time the market has managed to bounce. Here we've come close enough, market has held, and of course we are bouncing. So the daily continues to be good, but again the key is whether the RSI on the daily continues holding that flat line, this line here, this trend line support continues to hold, the market is at least, or at the very worst, the market is sideways. So in other words, the market remains very stable, very healthy. If you take a look at the bank nifty, the banking sector here, you can see that there's a breakout on the weekly this past week, and as long as that breakout is intact and holding above that number, this market might have a chance of moving higher, or this sector. The level here we are watching is, now that it is above the previous weekly closing high for 2016 at 16953.65. After many weeks of being sideways or in a tight range here, we are finally moving above that range. So this breakout looks very healthy for now, and keep in mind this can actually be improved, or the market can move higher if, it's a big if the RSI can stay above 69.1. In fact, most interesting is this is exactly where the market closed on Friday. So above this 69.1 is bullish. Failure to hold above 69.1 is a short-term bearish development. But the way the market closed, it's setting up potentially to at least be stable, because even as long as price is breaking out above 18,953, the market should be okay. But also watch the RSI behavior, because again, anything above 69.1 and you might start seeing another accelerated move to the upside. If you take a look at European markets, and I'm going to use here the Euronext 100 ETF to cover markets in the French market, the French CAC, to cover the DAX. No! To cover the DAX and also to cover the FTSE. So this index here for this week, I'll use this index to cover these three. And what we see here on a weekly chart is, again, another market showing potential for weekly resistance. If you take recent RSI highs, we are coming here. We seem to be stalling on a weekly chart. And yet, we can also see another resistance level, which is coming back to test the break level on the RSI. So this break in the RSI brought the market off the highs of 2015, off these levels. And so again, we are testing that, and we seem to be coming back to resistance. We hit this with a double top on that line for the highs there. We hit this again for the highs here, hit that again for the highs there. And now we are doing also what looks like, in my opinion, to be a double top on a weekly chart. So the weekly charts, not as great looking. And this could actually be an argument for why the markets could see short-term pullback, a deeper short-term pullback, because here we are seeing the resistance on this line, and don't forget the other line connecting recent RSI highs is also showing resistance. So that could be a problem. If the market was to truly move higher, then we do need to force our way through and above those two lines to improve recent highs. Otherwise, this resistance could be a problem. Now, this is a confusing spot in the market, because if you take a look at the daily chart is pretty much, let's call it, stuck in a range, got top side resistance, bottom side support. So until we can move out of this range, you see, it's hard to see which way the market wants to go. Now, add to the fact that if you take a look at the monthly, and on the monthly, to understand this is you have to go back and figure out where the market started the best move recently. And the move came when the market moved above this resistance line. On hindsight, even on hindsight, we can still use it. Ever since the market jumped above this range, you see the market went on a nice run. So we can draw a line from this entry here, which should be somewhere around here. So let me draw this correctly. So this is the previous line connecting the highs. The market eventually clears that during this period here. And so we draw a line from here. And as of right now, you can see that the market has hit that line twice and we've held. So which suggests that month to month, these markets continue to be stable, if not eventually preparing to move higher in the coming months because of this double bottom support on the monthly. Now, of course, if we at some point fail to hold this line and we crack below that, then that would suggest now the equation changes to a market that really wants to drop. So right now, a little bit of a confusion between dailies, weeklies, and monthlies. I think the net result here is monthlies are holding, dailies are sideways. At the very worst, the market is also sideways. Of course, more information, especially if the weekly chart continues showing that it is failing to hold the recent levels on a resistance level. So once this is confirmed, the market's been unable to move above this line and recent topside resistance line. As long as the market is showing resistance on the weekly on these two lines, maybe eventually we see that the market cracks below 50, stages a big drop on a week-to-week basis, and continues probing lower prices. So a little bit of a confusion. Of course, we'll have to see which way the market decides to take in terms of the daily chart. And again, the dailies are stuck in a wedge type formation, in my opinion. this movement either above or below might give us the next meaningful direction. So a breakout will be bullish, and a breakdown below the wedge would be short-term bearish. We can also watch the Canadian market, because if it turns negative for the month, it would confirm resistance on the monthly chart at this price, at this RSI level here, because this is where it broke down in 2015. This break brought the market off the highs there, and so failure to hold above that line could be a problem. So if the market turns red for the month, confirming resistance here, that would be net bearish. Okay, in fact, keep in mind, if you take a look at the long-term weekly chart, for now the argument here is we've come back, we are testing the break off the highs of 2015 on a weekly chart. We broke down here off the highs there. Of course, we've never been back to those levels, and so we draw a line from here, and as of this past week, the market has hit that line and is showing resistance. That resistance also seems to be with the rejection at 69.1. so again, some of the weekly charts worldwide are not as great looking, and maybe the weekly charts start forcing other time frames to also conform to a market that wants to pull back. So this weekly chart is bearish. Confirmation of bearish situation needs the monthly chart to turn red, and I think that's the theme for this video, is as long as the monthly chart in your market is not down for the month, you can still have a reason of being bullish. But once they turn red for the month, then those monthly charts become very bearish. If we take a look at the Brazilian market for now, we can give it the benefit of the doubt. Why? Because on a 3-year monthly chart, which is what we have in front of us here, it is doing its best to break out to 3-year highs. So if it can hold to 3-year highs, that would be bullish. The MACDs are also doing their best to stay at 3-year highs. So here we can give it the benefit of the doubt, albeit with a little bit of suspicion, because if this market also turns red for the month, the monthly charts turn and become ugly. Take a look at the monthly chart here, and you can see that if the monthly chart was to turn red and fail, it would confirm that it has come back to test this level here. This break in 2011 has brought the market to such lower levels that now we are coming back to test the RSI break level on the monthly. If the market turns red and confirms resistance at this current level, that would be bearish. The last time we hit that level and stalled with uniform activity was during this period here, and of course the market did go on another steep drop. So here this is where the battlefield is. Above the red line, and the markets are bullish. And yet resistance on this red line would suggest that the next major swing trade for the Brazilian market is lower. So we have to be careful and wait for this to play out, because eventually it's either breakout for a move higher or failure to break out, and this line stalls any current movement and the market drops. In fact, I even forgot to mention, we stalled on this red line here in early 2011 for the highs, 2012 for the highs there. So the monthly charts, a little bit of a suspicion of eventually reversing and heading lower, but we need the monthly charts to be down for the month to confirm resistance. Also, if we take a look at the hourly chart, there's a reason why the market is not really dropping, because you can see if you take the lows on the hourly chart, the market is finding support exactly where it needs to find support. Recently it came back to this support line on the hourly and held. And also if you consider where the recent lows were recorded, so talking about this period here in price, this is where the RSI moved above a range, and since then, so the RSI moved above a range there, and since then the market's been coming back short term to this green line and showing support. As you can see, it held during this period for the lows there, it held here for the lows there, and it recently touched that green line and is bouncing. So hour to hour, market continues to be stable. So again, until world markets turn red for the month, we have to remain bullish. Once the market, and if they turn red for the month, then we can start using those monthly charts for sell signals. For now, the market continues to be stable. We should expect it to be at the very worst sideways, at the very best momentum to the upside. Eric Muather with muather.com. As always, good luck and good night. Not good night, good luck and good day. Anyway, wish you guys all the best. Keep in touch, see how things go. Peace and blessings. I am out. Maybe. Okay, I am. I'm pressing stop. Stop. Bless. Testing 1 2 3. Testing 1 2 3. Testing. Hey. Testing.